Link was posted. And all right, X is back working. We're live, and it has posted automatically. So you should have got a notification. Hopefully it did. Guys, what's going on? Welcome back to Wolf. It's good to see all of you here. We're going to be jumping on with Mr. Robert, as we always do each week, talking about the markets, what he's seeing in the markets. We had NVIDIA earnings yesterday. We had a whole thing happen with Jane Street this week as well that I want to get Robert's thoughts on. We had a pretty crazy viral article from someone we both know, Justin, who dropped this article. And you guys remember we covered it a little bit in yesterday's stream with Thomas, and it had like 500,000 views. And since then, it's done like a 10x. I wish I could have invested in this thread because it's now at almost 5 million views. Pretty mixed opinions across the board. Like I've heard some people saying this is beyond cope, and they're laughing at it. And then I've heard people say it's actually really interesting. We've got people like Jeff Park from Bitwise, formerly Bitwise, make some big posts about this as well. So it's actually got a lot of chatter on the timeline because people are saying, hey, there's a possibility this is really the reason Bitcoin's not at $150,000. And so it really depends which side of the road you fall on. And so I want to get some of Robert's thoughts on that. Otherwise, dude, a ton of things going on in the markets. NVIDIA is down, gave back a lot of the returns that we saw yesterday. NASDAQ's down 1.5% almost. S&P's down 0.6%. The VIX is up 7%. Bitcoin is up. It's around $67,000. And so a ton of action going across the board. The commodities are all a little bit down. Gold's still holding well over $5,100, almost $5,200. Silver just below $90. Copper at around $6. And so there's a lot of things to focus on. So Robert, I'll pass the mic over to you. I'd love to get some of your thoughts. If you want to start on the Jane Street stuff, if there's something in the market you want to zoom in on first, happy to go whatever direction you want.
Yeah, so both Justin Beckler and Roberto Rios, both of them are good friends. They both did an article separately on the Jane Street thing that I would highly recommend everyone go check out. Yeah, I think that it's a bit ironic that you have the article come out and Bitcoin immediately posts, one of the best days that it's had going all the way back to I guess January 13th. I mean, if you take out that day after the capitulation, if you take that day out, it's like the best day in months.
Yeah.
And the S&P 500 was kind of up on a weird gap up yesterday. And Qs, so like you could make the argument that the Bitcoin rally yesterday wasn't, that it was just following the kind of traditional correlation. I didn't even check to see if, software was up. So you could kind of make the argument that it had nothing to do with the Jane Street disclosure and everything to do with kind of the correlations that Bitcoin generally holds, to IGV, to the Qs. But I don't know. Zero Hedge has been, kind of pointing out this very predictable 7 a.m. Slam on Bitcoin and other crypto, I think, too. They were doing it, too. And, it got to the point where it was almost a joke. Every single day, Zero Hedge would be, a warning about it, right? Predicting it. Then it would happen, and he would quote tweet and show. It's like, and it was just every morning. I have kind of a list on X that has Zero Hedge and Walter Bloomberg, and kind of I treat it like a bit of a kind of newswire. Yeah. And I'm looking at that through the when the market's open, and every day, he would post this, predict it, then it would happen, and then it was such a joke how reliable it was. I mean, markets are not supposed to be that reliable. You shouldn't be able to predict an exact movement in a particular ticker every single day. That's just a joke. And that's kind of what it became. And he Zero Hedge deserves credit for kind of being way out front on the Jane Street potential manipulation. For those of us who have an AMC or GameStop, kind of meme stock, for those of us that were involved in that kind of scene back in 2021, Roberto Rios was Peruvian bull. He was one of the big GameStop guys. So, we kind of both come from that background where it's not necessarily surprising. On the equity side, there's all sorts of insanity that people wouldn't, normal people to invest in the stock market thinking that it's regulated, thinking that it's fair. You tell them some of these things that are not conspiracy. They're like well documented fact, and they don't believe you. Yeah. For example, there was a guy who he had a relatively small company. I think the market cap was like 20 million, 30 million, relatively small. And he bought up literally every single share in this company over, I think, like a year and a half. And then he would sit there and watch as, 10,000 shares come through short on the tape. Then another, 15,000 shares the next day. And like he had, ownership of literally every single share that this company had ever issued according to, the float. He had bought up the entire float, but then he would watch as the float would trade again over itself, like day after day after day after day after day, knowing that he owned every single share of this company. And he sent it to the SEC. They didn't really do anything about it. I forget the guy's name of the company, but there are those sorts of reg show violations, naked shorting, all that kind of stuff that some of us, back in the meme stock days remember well. So yeah, you take a kind of unregulated corner of markets like crypto, Bitcoin obviously being a little bit more well regulated with futures and with the spot Bitcoin ETFs. But as Jeff Park pointed out, like those spot Bitcoin ETFs, Jane Street and some of these authorized participants, it's taken Bitcoin away from arguably the kind of decentralized, immutable ledger and all that, coded scarcity. All those properties that Bitcoin held are getting eroded, as it becomes more financialized, and as spot Bitcoin ETFs, but also futures, and it's gold and silver kind of have also seen what happens when you financialize what's allegedly or supposed to be, or in reality is a scarce asset. Once you start to financialize it, it's not pretty.
I was going to say, like, how much does it affect it? Like, and
I think
gold and silver, like,
I think it's me. I don't think it's insignificant. Is that to say that every time Bitcoin goes down, it's manipulation? No. Right. That kind of stuff is kind of asinine. But it is to say that, as you financialize, an asset, there is the potential for manipulation there. And, it also kind of comes down to what's your definition of manipulation. Some stuff could be liquidity provision and normal, quote unquote, market making that could have a negative impact on the price or a positive impact on the price. So, it's just kind of, it's one of those things. And, as folks get more and more educated with the mechanics, the plumbing of modern day markets, they come to realize that kind of preconception of, it's all very regulated, it's all very on the up and up, is shattered as you learn more about the way that the mechanics of it, the plumbing of it, the way the markets actually function.
What are your thoughts on this tweet? So I saw this from I just unshared it. 1 sec. Pull it back up. So we'd seen this like a few days before all this had kind of gone down, but Jane Street was noted to have been aggressively accumulating MSTR the past few months here. Strange timing. This lawsuit comes under fire. People are saying, hey, this is the price price suppression has been going on. And then you look and see that they've been buying up MSTR, which is obviously a big Bitcoin company. Any thoughts on this? Is this just kind of like food for thought? It's just sort of like a slight nothing burger type of thing, or is there maybe more under the surface here?
So I think it's probably related. If I had to guess, it's probably related to the MNAV. So a very, very popular trade a year, I don't know, starting a year ago. What you would think it would have been put on initially when the MNAV on MSTR went to like 3, I think, or 3.5 was the peak there, November 24. You would think that the trade would have been put on in size then, but it doesn't appear. Like, I didn't get the impression that this particular trade was put on until kind of later, once the MNAV had already kind of come in a bit. But there was this very popular trade of short MSTR, long spot Bitcoin, and so you're directionally neutral. You're not taking a directional bet on Bitcoin. Obviously, MSTR very directionally correlated, or correlated to the Bitcoin movement. You're not taking a bet that Bitcoin is going up or down. It's kind of like a basis trade where you're literally just trying to capture a spread. In the case of MSTR, it was obviously MSTR was trading at 3 times or 2 times what the actual Bitcoin that it held was worth. And so what you were trying to do was you were just trying to capture that MNAV eroding from 3 to 2. So you'd be short MSTR, long spot Bitcoin, and you're basically kind of directionally neutral, you're market neutral, and you're just trying to capture that spread. Well, if there was a short covering, maybe that's what we're seeing, right? Because to unwind that trade, now the MNAV is what, 0.8, 0.7, I think. So to unwind that trade, you would buy back MSTR and you would sell Bitcoin spot. So that could be, there's probably what it is, if I had to guess.
Got it. Makes sense.
Because that was a very popular trade, and the Jane Street being who they are and kind of engaging in the kind of trades that they do, I would imagine it's just kind of an unwind of that short MNAV trade.
Okay, got it. Makes sense. Very nice. Okay, so yeah, dude, I'm shocked at how much that thread took off there. Got people talking.
I lost your audio.
Oh, can you hear me now? Can you hear me now?
Can't hear you.
Oh, strange. The bottom of my screen, I have both audio coming through.
You're talking, but I can't hear you.
Drop out and testing audio. If you guys are watching, please let me know if you guys can hear my voice. If Robert comes back and it doesn't work, then I will also drop out as well. So if it doesn't. Okay, we got a couple people that can hear you both. Interesting. Okay, got it. Give us 1 sec, guys. Okay, interesting. Okay, we'll have Robert drop in and back out. In the meantime, if you guys haven't already, please do take a second and repost the stream if you're enjoying it. Definitely follow along here at Wolf Bitcoin if you enjoy this type of content. Robert is also tagged right over her faces. If you enjoy this stuff, he goes way in depth on YouTube as well as X. But definitely be sure to follow us both if you enjoy this content here. Hopefully we have Robert back now. Hopefully,
yeah, it's better.
Okay, cool, perfect.
So I don't know how much of that you heard, but
I heard all of it.
Oh, okay, cool.
Yeah, I'm good.
So yeah, if I had to guess, that's probably what it was. Just kind of an unwind of the short MNAV trade, if I had to guess. And honestly, MSTR is looking kind of good for a long. Maybe some like 200 call options or something.
Oh, all right. Here we go. One other thing I wanted to dive into, a few things. So I don't have too much to say, honestly, on this ZachXBT thing, but it did happen. So like what people were looking for Thursday, basically ZachXBT, like the crypto FBI investigator guy that everyone knows, put out a few days ago. He's like, hey, I'm going to be exposing a massive mover in the crypto industry. People on Polymarket were taking bets. They were thinking maybe it's Meteora, maybe it's someone huge. Now looking back, I'm like, it probably wouldn't have ever been a company that big. I just feel like, I don't know. It's almost like shooting too high sort of thing, like trying to bring down the entire system. You hit like a pump fund or something, the amount of billions that they made. He ended up going after Axiom Exchange, specifically this guy named Brooks Bauer, who had a lot of information on the back end that I'm not sure if it's like you should or shouldn't have it, but he had access to all of it. He used all of it. He was getting way early access to everything. He had tons of information, and he capitalized on it, I guess you could say. Made a ton of money, made some of his friends money. That's essentially the story. It wasn't like a crazy like breaking thing. I think people were kind of hoping it was a pump fund or a meteor or one of these other guys that people felt slighted by. But this did come out, so this kind of was the thing that people were talking about. There was a lot of speculation on who it might be, what kind of effect it would have in the industry. I'm not thinking this is going to have an effect on like the price of Bitcoin or anything like that. But really interesting. I mean, this guy is like, of course he's got a Milady PFP. I was like, pain, dude. Of course he looks like this. But yeah, he deleted everything. Jane Street deleted all their tweets as well. So that was an interesting thing I noticed. I don't know if you saw that, Robert.
Yeah.
Both these folks both deleted their stuff. So I don't know, man. I'm not sure what to think anymore. You can't trust anybody in this industry.
Yeah. You're gonna get opportunistic people, in a kind of a new frontier, that is crypto. It appears to be just endless. You kind of hoped the back with SBF, that would be the end of it, but it just kind of goes on and on. I mean, Jane Street, is pretty, it's even bleeding into kind of the traditional finance corners, right? It was one thing when it was just a bunch of like, kind of degenerate, opportunistic people, trying to play around and rug people in the meme coin market or, the altcoin market or whatever it was. One thing when it was that, it's a totally different thing when it starts to become, Jane Street. It's kind of almost come full circle. But yeah, it should be pointed out, by the way, with Jane Street, like they've run into issues with before the Indian stock market and allegations made of manipulation in the Indian stock market. I'm pretty sure South Korea, I could be wrong on that, but I'm pretty sure I saw a couple months ago that South Korea was investigating them. It might have been China. It was somewhere investigating them for allegations of kind of manipulation. So yeah, it's not like a new thing, and you kind of expect it. I expect it in crypto. You don't expect it as much, at least in TradFi.
Yeah, I'm beginning to notice. Like I watched what's it called? Like I watched the industry, I guess, adopt crypto, and I saw a lot of similar rails that I saw in crypto that I remember being made fun of, and the people were like, oh my god, these crypto guys. Then I look at Wall Street, I'm like, you guys are doing the same thing. There's just ties and suits and big words that I don't understand half the time, but it's like a lot of the same stuff. People are just extracting money out of the
it's what you get. This kind of like hyper financialized. I mean, it should, it's Dutch disease for the dollar. This is what we get when our economy's major export is the dollar, and we run huge current account deficits. What that means is that a huge amount of money right now, over the past 4 quarters, over the past year, the amount of capital that is flowing back into U.S. financial markets from abroad, just foreign flows as a result of our large trade deficit, about $1.2 trillion each and every year.
God.
So so it's pretty wild. And what you get is kind of a hollowing out of the real economy, and finance, insurance, real estate, financial services, that becomes kind of, the bustling industry. And that's just a result right now, $226 billion just for last quarter in terms of capital that came back into U.S. financial markets. And that's just that's just an accounting reality. People, a lot of folks, talk about the trade deficit and think that it's just kind of financed somehow. They don't ever really like stop to think, well, if we're running a $80 billion per month trade deficit, that means that $80 billion more, that we're buying $80 billion more from the rest of the world than we're selling to them. How do you think you finance that? Like where does that 80 billion come from? And the answer is it comes from, the rest of the world purchasing NVIDIA at,
Yeah.
55 price to earnings ratio or whatever it is, or US Treasury. So
Yeah. Yeah. And by the way, I don't know if you meant to or wanted to pull your screen back up. There's a couple of things I wanted to hit on. One of them actually was we talked about this on this. God, did we talk about this in the space? All my shows are blending together now. But we had NVIDIA earnings yesterday, and originally spiked up after hours, was kind of chilling for a little bit, and then ran up. And then today we look at it. I hadn't even checked. I just assumed we had held it. Didn't realize the markets had taken a turn for the worse a little bit. NVIDIA's ended up being down. But yeah, I was going to say, if you wanted to pull up the NVIDIA chart, if there's anything that kind of caught your eye there, if there's anything in the earnings reports that surprised you, I'd love to dive into this a little bit.
Yeah, so they beat. That it was actually a pretty large beat. I think it was 65 billion versus 62, 61 was what was expected. So it was a pretty large beat on top line revenue. Data center revenue was also pretty strong, and their guide for the next, I think they guided up the next 2 quarters. Their guidance was pretty good as well, and you had an initial pump where it pumped up to 200, 202, 203, and then it just sold off. I got put to open, which did very well, so I'm happy for the pullback. I guess made money on it,
Yeah.
but yeah, no, the way I see it is, there's a couple kind of key information that we're getting from this. So this is kind of a news failure in my opinion. You have the fundamentals surprising to the upside, and you have it failing. And so yeah, like 200 was kind of my what I was watching overnight was that 200 level, because it's just a very significant psychological level. And yeah, we pumped above it, but then we couldn't hold it. And if you draw a line here at 200,
I don't have your screen, by the way, Robert.
Oh,
I just have.
I've been sharing here. I've been talking about it.
There we go.
So yeah, here we go. Yeah, 200 was not held, and the fact that we rejected at 200 on good fundamentals, on top line revenue beat and pretty good guidance too. The fact that we rejected, couldn't hold above 200. The retail side of kind of the AI trade, I saw a thing yesterday that Optimism from, I think it was Schwab that put the report out. Their retail they do surveys from time to time of people that use Schwab, retail guys, normal people. And the amount of optimism for the AI trade had faded quite a bit. I think it was like from 58% bullish to 51, or maybe even the high 40s. So a pretty noticeable deterioration in the bullishness of retail traders when it comes to the AI trade and kind of the Mag 7. So you have a potential news. I'm not calling a top in NVIDIA or anything like that, but I think it's very interesting that the kind of key psychological level 200, we couldn't hold above that overnight, despite the fact that they surprised to the upside. They beat in a pretty major way on top line revenue, and their guidance was good, as well. So the fact that it's selling off as hard as it is, I think is a signal. You have the Qs down. Last I checked, it was like 1.5%. Yeah, 1.5%. Yeah.
Jeez, dude. Yeah, I was gonna say I didn't know how much the market was gonna hinge on this report. I feel like everyone was on the edge of their seats waiting to see if they're gonna be able to keep the train running here, or if there was gonna be, they're not gonna beat their expectations.
Yeah, I mean the fact that they beat expectations, which were already pretty high,
right?
And it's selling off to the degree that it is, I think is definitely a signal worth watching. Retail, apparently, according to the Schwab guy that was on CNBC, he said that retail generally trades the first 30 minutes. after Nvidia reports. They don't trade apparently after hour. The majority of the volume comes that first 30 minutes at open. And so yeah, like the open was here, I think. Yeah. So first 30 minutes they were doing nothing. Retail was doing nothing but selling. So yeah, you don't have the retail bid holding everything up anymore. Yeah, that's been, it's one, if you're smart money, if you're a hedge fund, it's one thing to buy, the Mag 7, the AI trade, kind of early, but you're hoping for like future buyers, right? And generally, the adage of like smart money goes first, then, the taxi driver, when he's telling you about the hottest new stock, you should sell because he is the last buyer. There is no one else left to buy. It can only go down. And so like the prospect of buying and holding, if retail can carry your trade up, then you're probably not too worried. But once retail starts to step back from that trade, I think that, there could be some concern from kind of the institutional money that, was hoping for retail to continue to buy, and if you look at all the major tech, right? Here's Microsoft, brutal double top on Microsoft.
No kidding.
That is that's
picture the weekly
perfect.
Chart?
This is a weekly chart. Yeah.
Oof.
So it set technically it and it's even it literally is a perfect double top because this candle here didn't quite get to break to a new high. That's really when you get bearish, is when it can't break to a new high. So yeah, you have a double top on Microsoft. Meta looks pretty ugly. I mean, this is like textbook head and shoulders pattern right here on Meta. Let's take a look at Apple. Apple doesn't look as bad, but then again, they also haven't been, one of the hyperscalers. Google, arguably one of the better performing Mag 7 trade over the past year, not looking too great either, in my opinion. So, I don't know what it spells for the Qs, but it's worth, kind of reminding everyone, if the stock market starts to decline in a noticeable way because the over concentration that had built up from 23 up through now, if the stock market, which has been propping up the wealth effect, right? Like what, the top 10% of income earners look at their Robinhood, and they go, oh, I'm rich. I'm going to go spend more, buy that car, buy that handbag, buy that whatever. Once that goes in reverse, because they look at their Robinhood and they're like, oh, not so rich anymore. My stock is down, 10, 15, 20, 25, 30%. The wealth effect goes into reverse. And so you have the top 10%, which has been propping up consumer spending, which is about 2/3 of GDP. So you have the major component of GDP in the overall US economy being consumer spending. That consumer spending is driven by the top 10% of income earners. Those top 10% own all the financial assets, right? They have the vast majority of the top 10% own 92% of US equity exposure, household equity. So they literally own 9/10 of the kind of retail ownership in the stock market. Stock market starts to have a hiccup, and that chain reaction, that kind of reflexive vicious cycle could cause a US recession, right? Like a stock market decline, a financial market decline could end up causing a real world recession, in the real economy, a real world recession. So I think that it's we got it. That's kind of a consequence of having such a hyper financialized economy, is, once your financial assets start to have a bit of a hiccup, it can cause, real actual economic contraction.
Yeah, 100%. And going a little bit back to NVIDIA, I know there's an interesting ETF there as well, but with NVIDIA, were you thinking like when earnings was coming out, I know we've talked about on the stream together and Spaces as well multiple times now, but just a general unease in the market. Like it was probably fine, but like kind of a little bit unsure, kind of not sure if I want to keep my money in here. We talked about, I think it was Druckenmiller or someone else who had a big ETF, and he literally was just like buy everything because I don't know what's going to happen here. Were you surprised at all with the NVIDIA earnings, or was it kind of like, okay, cool?
Well, the earnings, the revenue, I don't watch, single names and
Right.
track that kind of thing. But the reaction, yeah, I was kind of expecting.
Okay.
I've been getting, pretty bearish on tech. And I think that, yeah, you look at all those, NVIDIA doesn't look too bad. I guess you could make the argument this isn't really that weak. It's kind of been grinding higher. Yeah. But like Meta, Microsoft, like Amazon, they all look really weak. And so, this is what you get in an over-concentrated market. You get a couple names starting to underperform, and it's going to drag the index down. Now, the index isn't telling the whole story. So this is the dispersion index that I was talking about in the space yesterday afternoon. This is implied dispersion. So it's looking forward. Dispersion being how much variation in return amongst the individual components of an index. So I'm pretty sure this is the S&P. Yeah, this is the S&P 500 components. What this is tracking is how much is the market expecting those individual names to vary in terms of their returns. So when dispersion's going up, you have an expectation of more variation between an individual, the different names of the index. You have more variation in terms of what's expected. If everything's going up 1%, there's very little dispersion. But if, one name is up 15% and another one's down 25%, that's kind of a high dispersion sort of environment. And we've seen that climbing since, kind of mid-December, dispersion and volatility. So you go back here to volatility, that kind of mid-December period of time, before the holidays, volatility has been going high. I mean,
wow.
It's very under-discussed, in my opinion.
I don't think I've heard anyone say that.
Dispersion?
Yeah, I don't really hear anyone bringing these things up.
Yeah, you could also look at correlations. So this is kind of another thing I track, correlations, implied correlations. This refers to the volatility that you hear the phrase when correlations go to 1. That's what this is tracking. So when implied correlations really kind of move higher, everything is getting sold. It's a good way of tracking the kind of, VAR shock, value at risk, sort of, just mechanical degrossing, de-risking across everything. This implied correlation index can be good for tracking that sort of thing. But yeah, dispersion's been headed higher. We've seen kind of a pretty violent rotation. I actually have the chart here. So I thought this was kind of interesting. You have Bitcoin inverted, right? So as the red line's going up, Bitcoin's going down. Then down below, you have defensives divided by technology. So defensive relative to XLK, which is the tech index. And the defensives, I didn't market cap weighted or do anything fancy. I just took consumer staples, utilities, and healthcare. Those 3 sector ETFs divided by 3 to get an average, and then divided that by tech. And you can see Bitcoin has an inverse correlation. So as defensives, which you buy ahead of if you expect the economy to start to cool off, potentially, a recession, if you expect that, you're going to have defensives outperform the high growth, high beta tech sort of, Mag 7 AI trade. And sure enough, that's what we've been seeing. So the Bitcoin top was here on the 7th of October. Obviously, we had, October 10th, which kind of, I think, skewed some of this. You could have argued that Bitcoin probably headed higher for another couple weeks. But yeah, defensives relative to tech bottomed in late October. And if you go back to NVIDIA, that topped in around the same time, back here, see, October 29th, it was like the peak. That was when the rotation started, was kind of late October. And you can see it across, all sorts. If you look at XLP, which is consumer staples, relative to XLK, go back to the low, it was end of October. The dispersion really arguably the kind of rotation under the surface started then back in late October, early November. If you were watching S&P 500 or Qs, you didn't really see it too much. Yeah, we got kind of a pullback in Qs. SPY wasn't nearly as bad in that kind of, going into the holidays. You didn't really, zooming way out, we basically been range bound on SPY, arguably going back to October of last year. You wouldn't really see it in the headline index, but where you would see it is if you track sector performance, for example. So here's materials, which confused me, right? Like I've been flagging this on our streams for a while now, and I couldn't really get my head around what was going on, because on the one hand you had materials, you had industrials doing really well, right? Breaking out to new highs and outperforming the S&P 500. You had materials, you had industrials. They were both outperforming the S&P 500 and breaking out to the upside. Materials really went on a ripper. It was up like 14%. So from here, early December up through now, materials are up 21%, right? And that's in industrials. That's what you would expect if we were early cycle in the business cycle. That is what you would expect to happen in if the equity market was expecting growth to start to accelerate. That's what you would see. You would see materials outperform, industrials outperform. But then on the other hand, this is consumer staples. This really was outperforming too. Well, when would consumer staples outperform? Consumer staples would outperform if the equity market was worried about the economy falling off a cliff and going into a recession. So it was like, I couldn't really make sense of it, right? Why on the one hand, you have materials, you have industrials outperforming, showing that the equity market is expecting growth to start to accelerate. But then on the other hand, you have defensives, consumer staples. Here's consumer healthcare. Consumer discretionary was not performing well. Healthcare, right? Utilities, those sort of sectors, very defensive in nature. That's what you buy going into a recession, because people don't stop needing electricity. People don't stop needing food, Clorox, cleaning solution, right? That kind of stuff. So it was quite confusing. Why do you have both happening? And what I realized, recently, and kind of the impetus in part for the article I wrote was had nothing to do with the equity market was not concerned at all about growth. That's not what was the signal that was being sent by what was going on in the equity market. What was going on was the equity market was worried about AI, right? Because think about it. What can AI not disintermediate and dislocate? It can't dislocate healthcare, not yet, at least, right? It can't dislocate the people's need for electricity. If anything, AI, compute electricity demand is going to go through the roof. So, consumer staples. People don't stop buying food, right? Because AI. People don't stop needing electricity because of AI. People don't stop. So you have, on the one hand, materials, obviously, with a huge amount of capex going into data centers. Materials are going to do well, and industrials are removed from AI, right? Like, yeah, maybe down the road there is disintermediation that happens with industrials, but generally, like, an AI can't build a steel pipe, right? It once you look at it through that lens, it all makes sense, right? That is why you have defensives, outperforming the S&P 500, and you have materials, industrials also outperforming the S&P 500. That's what you would see if the equity market was not trying to send a signal about growth and about potential recession, but trying to send a signal about being concerned with AI. And that all started again late October, early November, that was really when the rotation with healthcare, consumer
Yeah.
staples, that's really when it all started.
So you think that right now is the time to jump into those, or do you think like are we pretty late to that trend now? Like
Yeah.
where are we sitting at?
I mean, yeah, it's not to say that it can't continue. But like I don't really see uh yeah, I don't really know where where I would want to be. Maybe software, the move in
That's why
SaaS.
the guy was like, buy everything. He was like, after all this, he goes, I think you just have to buy it all.
Um, yeah, I mean, maybe it's SaaS because this
Yeah,
move
maybe.
is pretty. I mean, it round tripped from here in Liberation Day.
Mm-hmm.
It went up. The software ETF went up by 53%, and then it declined right back to the Liberation Day low. I don't know.
Looking
This
like a
chart
crypto
look.
chart.
Yeah, yeah. It's not to say it can't go lower, because I do think that the kind of AI, the Citrini kind of angle, I do think, I'm not an AI expert. I'm not a nerd when it comes to, agentic AI and, this model uses reductive, blah, blah, blah. Like, I don't know. I don't, it's, I'm not smart enough to, to listen, to understand when those people talk. It's not my form of, what my brain does well with.
Yeah.
But just my personal experience and just what I'm seeing in what the market is pricing, because it's not just the equity market. If you look at rates have been falling. Now, we've been here before. We had a growth scare here in late 2023, kind of a bit here into 2024. We've been here before where rates have fallen, and the 30-year, to be clear, is still at 465. When the Fed started to cut, it's basically done nothing but go up. When the Fed started to cut, it was at like 4, right? So, the long end rates are still kind of gradually trending higher in the kind of overall trend there. But cyclically, I think that there's room for the 30-year to decline, the 30-year yield to decline further from here. And so you have, the bond market flattening, and rates coming down across the curve. You have the equity market with this violent rotation under the surface. I mean, here's Staples relative to SPY. And again, you'll notice it was that kind of late October, early November, when it and then it retested that low here in early January. But
Wow. Big
the
move after
degree,
that.
yeah, the degree of outperformance, and that's outperformance over the S&P 500. So if you look at like XLB materials, right? So yeah, the equity market is worried about it for sure, that AI issue. And then you have rates falling all across the curve. And again, that kind of started here. You could argue, well, we should look at the 7-year. So rates really started to fall in kind of early February. But yeah, no, I think that there is definitely something there with the AI. So like stepping in front of a train, maybe as a trade, you could trade software here. It's pretty good support, going
Yeah.
all the way back to early 2024. There's pretty solid support here. So, you could do something like, you could put a set stop, maybe 75, and target a move to like 95, something like that. But I don't know. It's kind of one of those things like, do you really want to step in front of like, a train that powerful? Because yeah, I mean, look, going into the year, before this move, software companies had very, very high multiple. The amount of growth that the equity market was pricing into software was, pretty ridiculous. And so, a lot of this kind of needed to happen. But you could make the argument that, okay, multiples have compressed, and, maybe we get a bit of a counter trend rally here for a little bit, but I think that the AI disintermediation, I think that the degree to which AI can dislocate, things like software, and reduce the need for Adobe, for example, or Zoom, whatever it may be. I think that that's a pretty durable trend. So,
Yeah.
I don't know that I would want to step in front of it.
Zoom also had earnings, I think, yesterday, right?
Man, the Zoom chart is crazy.
Good Lord. There was, I don't know if it was our stream or someone else's, but we talked about a lot of stocks that had like big moves during the 2021 COVID time because obviously the entire change in lifestyle for everybody and certain assets really took off because of it. Dude, that chart is kind of disturbing.
This is the craziest chart.
Yeah, that is disturbing. I mean, imagine full porting at the top of that chart. Good Lord.
2019. I mean, the good news is you can only lose 100% of your money unless you're on margin, but then you could,
Yeah.
I mean, the good news is you can only lose 100% of your money. Imagine, up here selling, I don't know.
It's looking like the Melania chart.
Yeah, exactly. 848%.
God.
And we're down 87% from the peak.
Wow.
And I think it probably has further to go. Like if I had to pick a direction on Zoom, I would probably go short. I'm not, trading it, but something like Zoom, there's no reason that Zoom when AI is, when some 20-year-old kid can vibe code a platform, do they get it 100% right? Is AI like 100% perfect all the time? No. But I think that things like Zoom or Adobe, those sort of, I just don't see how AI doesn't severely disrupt their revenue.
Yeah, I'm with you there. Speaking on AI, I know we got a couple minutes. You got to bounce to another stream. By the way, big shout out to all the people who are listening in the audience right now. If you guys are enjoying the stream, definitely be sure to give Robert a follow. He's tagged right above our faces. And follow here at Wolf Bitcoin as well. We do tons of content like this each and every single day, whether it's on Spaces, audio, or if it's on stream like this, video and audio. We're also putting out a bunch of content. So definitely, if you're in the industry and you want to keep up, definitely be sure to tag along here. Do want to say a big shout out to Leverage Shares for sponsoring the show today. They've got a pretty interesting ETF actually, especially for those who are kind of tracking with the ETF or with the NVIDIA conversation we had earlier. Obviously, they had earnings yesterday. But there's tons of opportunities. If you're trading these markets, we talk about it every single week. There are tons of opportunities if you're a good trader and you want to be active. And maybe you don't want to trade the NVIDIA chart. You're looking for a little bit more exposure. Leverage Shares has some great options here. Here's just one of them. Robert, if you want to hit on this a little bit, the ticker symbol is, I was trying to find out. For some reason, I couldn't pull it up.
Yeah, it's not on U.S. Markets, but it's just kind of a, it's not listed in the U.S. But NVDI. And they use cash secured puts to try to generate income. And it looks like they sell put options on NVIDIA with strikes ranging from 5% out of the money to 10% out of the money. When this is the kind of thing that, if you're bullish on NVIDIA, if you think that, retail may be taking a step back and, if we get weakness in NVIDIA, a cash secured put is the kind of strategy that you can employ if you have cash, right, to secure the put. When you sell put, you're selling the right, you're selling that you're selling a contract to someone else that they can then exercise if the ticker reaches that price, where you are basically guaranteeing and promising that you will buy at that price. So if you're bullish on NVIDIA, and this is where the wheel strategy comes from, if you're bullish on NVIDIA long term and you think that, move to 170, you would start to get bullish. Well, you can sell a put, especially when implied volatility is high, which I would imagine today it's probably starting to tick up a bit. You can sell, 168.5 or whatever, the chain. You can sell put down here and generate income. And if NVIDIA never reaches that price, you just pocketed the premium. If NVIDIA does reach that price, you end up buying the shares at that price. But, to start with, you were bullish long term, so you don't mind buying at 160 or 165 or whatever it is.
That's a really good explanation for it. That's like, honestly, probably the most simple explanation you could have for that.
So selling a call is promising in the future that you will sell 100 shares at that price. Now it's only if the ticker reaches that price, and only if the person on the other end of the contract wants to exercise. But yeah, when you sell a call, you're selling the right in the future for someone else to buy your shares at that price. And when you sell put, you're doing the opposite. You're promising that you will buy 100 shares at that price.
Yeah, and honestly, like most traders I know, I found that at the end of the day, they were mainly trading in options and puts, and it's like a huge market that I don't think, like, the average retail trader probably is just buying spot positions and stuff that they heard in the news or on Twitter kind of thing. But there are some really, really cool options to trade, and so I definitely recommend you guys check it out. Income shares or leverage shares had a ton of different options there for you. By the way, it's not just that one. So big shout out to them for sponsoring the show. If you guys want to find out more about them, that link is going to be below the stream. And if you're on YouTube watching this, it'll be in the description. I do want to make sure, if you're an investor, you should be, definitely carefully consider the fund's investment objective, risks, charges, and expenses before you invest. The fund's prospectus and summary prospectus contains this and other info about leverage shares. And if you want to obtain that prospectus and summary prospectus, just visit their website at leverageshares.com. Again, that link is down below. Their prospectus and summary prospectus should be read super, super carefully before you invest. So definitely big shout out to Leverage Shares for sponsoring the show today. I see you pulled up a new chart here.
Oh, it's just the Korean stock market.
Oh, okay.
Just going parabolic.
Oh my God. I was going to say, what is this chart?
Yeah, it's the Korean stock market.
Dude.
And here it is in dollars.
Wow.
Yeah, just wild.
Okay, wow.
Another big day today.
I was going to say, have we ever covered the Korean market like this? I mean, what are we missing here?
It's two memory names. We think our concentration is bad over here in the U.S. Their concentration is even worse. But the Korean market is on fire. Yeah.
Wow. Okay. Very nice. Right on. Well, listen, this is an excellent stream. Robert, is there anything else we should be paying attention to in the markets, or anything you're kind of looking forward to? We've got final day of the week tomorrow. Obviously the rest of the day today, but
yeah, I mean, we got GDP. A lot of people kind of not understanding how GDP is calculated. 1.4% print, but that was due to the government shutdown dragging the government, the G of the formula, and outside of the government shutdown, GDP would be right in line with kind of the past 20 years of about 2.5%. So I don't think GDP was really anything to be too concerned about. We got PCE. PCE came in a bit hot. We're running with inflation at 3%. So
yeah, sure.
So when it comes to the Fed, they're starting to appear to get a little bit more hawkish. But the bond market is buying. Bonds are bid and rates are coming in. So there's a bit of a conflict for the next Fed meeting, maybe in terms of holding rates. I don't think they're going to hike, but holding rates versus cutting rates. So yeah, nothing too major. I would just be watching tech because I think that, again, this move in NVIDIA, despite the fact that they beat earnings, to not like a slight beat, like it was a pretty strong print. The fact that they beat earnings, but they're selling off so hard, I think that that's something to pay attention to, because of how insane the concentration is in our stock market. Like, I said months ago, maybe the bubble is not valuations, maybe the bubble is in concentration. And that's really where the bubble is. And I said that back in October, and that concentrate, we have been getting dispersion, we've been getting a broadening out, which is good. Now it's not good if you own NVIDIA or QQQ or Google or Meta, right? But it's good, I think fundamentally for kind of longevity and stability and the structure of the market.
Yeah, no, totally makes sense. Look, guys, I appreciate you all for tuning in. I know Robert's got a couple things he's got to attend to, so we'll get him out of here. But dude, this is a great stream. Talks about a lot of stuff, covered NVIDIA earnings earlier. Talked about the Jane Street stuff. Talked a little bit on Zach XBT's massive exposure. Talked about Bitcoin. Talked about a bunch of different markets. So I hope you guys learned something. If you did, again, be sure you're following Robert. Definitely subscribe to him on YouTube. And you're pretty freaking active on all platforms now at this point. And so for people who want like a full in-depth stuff, definitely hand over to the YouTube. But you're probably in a lot more activity if you're on X from him. He's in spaces and streams all the time. And so definitely be sure to follow him along and follow here at Wolf Bitcoin if you enjoy this stream. We have a lot more coming at you. And we'll see you guys all in the next one. We'll be back on Spaces, I believe, in about 45 minutes, talking tokenization, real world assets, things like that. And then we have some trader talk discussions later on. And then we've got Spaces all day tomorrow as well. So we'll see you guys there for that one. Take care, everybody.